In this segment, we're going to go over pit noise, who I use for pit noise, what he calls off. He's going to explain his services, how he started his service, what all he does. His name is Ben Lichtenstein. He is probably the best pit caller in the world, I mean, as far as the markets go. Some people, when you do pit noise, definitely sign up for a 2-week free trial. It'll take you a little while to get used to pit noise. You might not like it at the beginning. You'll learn to love it, though. If you keep it for about 2 months, you'll never do without it again. And we're going to just go through. He's going to tell you his story, what he's doing, and then while he's talking, I'm going to ask him some terminology of what, what's a bid, what's an ask. We're going to go through what a local is. And then after that, I'm going to show you how I use him. And then when we get back from lunch, from going over to the CBOT and the CME, we'll go through a tape reading lesson, and we'll have Ben on, and we'll be listening to that, okay? So Ben Lichtenstein, guys, of Real-Time Futures.
Thank you, guys. First of all, thank you. I appreciate the opportunity to speak here today. To get the word out, it's my opinion that a lot of guys actually don't know the benefits of the Squawk Audio. Throughout this presentation here, understand that I obviously have a biased opinion regarding the Squawk Audio. I think everybody should have it. It's my business. But in addition to that, I have a very firm belief that it is something that is absolutely priceless at times, and for some, and certainly a valuable service that can provide a great deal of information, insight, and again, just information regarding the markets. Again, thank you guys. I do appreciate it. I appreciate you guys. I hope everybody's enjoying your time here in Chicago. Appreciate the opportunity to speak here. I'd like to just give a real brief kind of introduction about the service. I'd also like to talk about some of the terminology, as Hubert mentioned. Let's talk about some of the uses, the applications. We'll talk about a couple common misconceptions just to get some ideas out of your minds that are possibly there that shouldn't be regarding trading, and we'll open it up for some questions. We've got about an hour here, so I've got to get back right around noon. But the business started out approximately 6 years ago. It was originally designed to provide information to off-floor traders that needed a stream of information that was zero delay, that was factual, that was providing them the confidence that that they're hearing what they would be seeing if they were standing right there. So what that required me, this was mostly for, again, off-floor traders. It was originally, there were about 5 or 6 Dow traders when the Dow futures contract first opened up over at the Board of Trade. It was absolutely mimicking the S&P contract. So what the Dow traders were sitting there doing in the pit was essentially just sitting up and watching the boards and waiting for the S&Ps to uptick or downtick. They would get short or long against that. A couple guys started to talk to me, and we were quoting guys that were actually spreading the E-mini versus the big contract. They were standing in the pit and listening to headsets, and we were quoting them, telling them who was buying and selling behind them or to the side of them if they can't see. For instance, originally one of the listeners was a local in the pit who was in the bottom of the pit, who, when he's standing this way, he can see everybody in front of him, but everything behind him is completely lost. So that if the activity's back there, then he's just looking. It might as well be nothing. So what my job was to provide these guys with the information of who's buying and selling, how many, with what intensity, at what price. Very simple facts. So again, the job became very simple in that all I was doing was providing the facts. Guys would say, well, what do you think? I don't care. I don't care which way the market goes. That's up to you guys to figure that out. What I'm here to do is paint a picture. Again, about 6 years ago, we started that out. Again, about the different sites are for different products. We've unfortunately have a little bit of identity crisis in that the approach that we've had to, sorry about this, guys. The approach that we have had to different products is that the different broadcasters, we look at it as a partnership with them. It's not, we don't think of it as necessarily our company. We like to think of it as franchise in different products. So we have a bond squawk service. We have squawk service out of the natural gas and the crude oil pits out in the New York Mercantile Exchange. We have the bond product's actually like a 5-year, 10-year combination with the bonds, and he talks a lot about the options as well. The S&P product is my self-broadcasting. We have an e-mini service as well, and we're looking to acquire the guys Joe. I don't know if you heard of them from a while ago over the NASDAQ. But point being in all this, there's various different products all providing the same thing, the information, the live factual commentary for off-floor traders to benefit from any of the knowledge or any of the things that we're seeing and how that affects the markets. Again, it's only a factual service. Rarely do you hear, never will you hear this is a good place to buy or a good place to sell, but you'll sometimes hear my opinion in that you'll hear me say, I think locals are stuck short here. It looks like locals have been selling a lot, they need to buy here. Sometimes we'll hear opinionated comments like that, but they're based on, again, what I'm seeing at that given point. The service, again, originally was geared towards a very professional trader that was, on the floor traders that have been off or off the actual S&P floor traders that were on different exchange floors. So the terminology that we use is very industry specific in that, we have some terms which we'll go over in a little bit, which, as Hubert said in the beginning, that's where the 2-week kind of period where you feel like your head's in the clouds for a little while, and like somebody's got a egg beater inside one of your ears and he's scrambling your brains for the first little while. But after you get past that, and after you get past kind of the overwhelming aspect of the squawk, you then start to hear and feel things that you can pick out, and you filter out the information that you don't want and the information that you do that's pertinent to your trading, to your style, whatever, is the important information that you pull from this service. Again, a lot of this terminology very specific to traders that have a very firm understanding of placing orders and transactions, so on and so forth. Also, one thing that I wanted to there's a lot of this information is information that you can't get just from a chart. There's certain things that I can see there that you guys can't from a chart, and I can easily convey some of this message, some of this over through the audio, so on and so forth. For instance, examples, some facial expressions, stuff like that. We'll get into that a little bit more in a little bit. I do want to get into some of the terminology here before we get. I don't want to plug the product too much more or plug the description of how we got started, but some of the terms that are that a lot of the guys actually have questions with are paper, for instance, is a phrase that I use to, well, before I get into the paper, there's 2 types of members in the pit. And you guys, by the way, I've got access for everybody tomorrow, so we'll all be down on the floor for a little while. There's two types of members that are on the pit. A member has an acronym, 3 or 4 letters that separate him from everyone else. He also has a clearing firm, which clears any of his trades. The members on the top step are all filling brokers. They're taking orders. They make their money strictly off commission, usually $1 a contract, depending on the deal that they have established with the specific client or the clearing firm. No risk, except for he's responsible for all errors. So, for instance, if he has a 20 bid for 100 contracts and it trades 10, he's held to those 20s if it rallies higher, as long as the 10 printed. Other than that, again, $1 per contract, 0 risk. He covers clerks who are responsible for watching his houses. You'll see the phone banks are all on the outside of the pit. The clerk stands back to the filling broker. He's watching the customers as if you guys were the customers. So I have a filling broker to my back who's now facing the pit. Inside of the pit, we're on the top step, keep in mind. Inside of the pit, it has levels that lead down to the lowest level of the pit, steps. Along those steps, you go down from your highest locals, your larger locals that handle most of the paper, all the way down to the smallest local, the 1-lot trader. So you have a 100-lot trader down to the 1-lot trader. The larger locals stand closer or on the top step of the closest to the paper. The larger locals also tend to stand towards the larger paper fillers. For example, you have the Morgan Stanley Merrill Lynch. Those are the guys that our biggest locals stand in front of. One of the reasons why the biggest locals on the top step is, again, the exact same scenario that I pointed out earlier with the local that was stuck on the lowest level of the pit. If I'm standing on the top step facing the whole round pit here, and I'm on the top step of the local can stand on, the only person who's behind me that I can't see is the one filling broker right behind me here. My peripheral gives me essentially the guy to his left and essentially the guy to his right, and certainly the whole pit. So this provides me with the best perspective on the pit. Now, luckily, we actually have I call it a bird's eye perspective, and you'll see that we're actually about 3 rows off the pit and raised above so we can look right down in it. The only locals that we lose out on, or the only activity that we really miss out on, is the activity that is the first locals in the row that we look over of filling brokers. But again, all of this it may be a little bit unclear right now, but we'll clear it up tomorrow quite a bit when you just see it. Again, getting back to some of the terminology and some of the overwhelming aspect things that you don't understand, these are the things that are kind of thrown at you, and over the process of 2 weeks or whatever the period is that it takes you to kind of grasp some of the concepts and some of the terminology, et cetera, you begin to not focus or even notice some of the things that used to require mental capacity, or that used to, for instance, a phrase that used to kind of sometimes it would slow you down a little bit. What was Ben just saying there? But the second that you learn that phrase, it just goes right through your mind without even a second thought put to it. So again, you get the opportunity to pick out some of the more important terms. I make a big distinction between paper and locals. It's a constant struggle. A paper filler or the customer order, again, is $1 commission for the member. The local is the market maker, though. The local is constantly providing a bid and an offer. Whether he's showing it or not is a different story, but at any given point, a filling broker can go to any local in the pit and ask for the market. Where is it? What's there? And what he's saying is, what's the bid? What's your offer? Now, granted, if we're tanking, the local's going to give him a lot worse bid than he's going to give him an offer. He's going to widen the market on the bid side for him. Now, with the E-mini and with the spreaders that we're seeing, that's only available during certain times. The E-mini has made the pit very efficient in that we used to have a $1 spread. It used to spread from 5 to 6. So it would be a 5 even bid, which means there's locals in the pit trying to pay 5 even, and there's locals offered at 6 even. They're trying to sell 6 evens. So however many times. So essentially, with a 5 even bid at 6 even, if a paper filler gets an order to sell 10 contracts, he's going to look into the pit, as if you guys are the pit, and he's going to look for a bid, and he'll go, I'll sell you 10. So you would sell 10 at 5 even, the worst price. That's if he didn't work the order at all. If he didn't say, I got 10 at a half, 10 at 40, 10 at 30, 10 at 20, if he just hit the bid. So the opposite of that would be buying the offer, taking the offer. So if the order came in to buy 10 and it's a 5 even bid at 6, 5 bid at 6, then he's going to buy the 6s. That is something that for some it actually takes a little while to grasp. It's definitely, there's certain terms that we use that are related to trade and trade actually occurring. For instance, if Merrill Lynch, one of my biggest brokers, one of the best, definitely one of the brokers that we lean on in the pit, if he's got 50 contracts offered at 6 even, he's going, I got 50 at 6 even, he's trying to push it. The hand signals are done that way. You're pushing something away from you and trying to sell it. When you're trying to buy it, you draw in. He's got 50 at 6 even, he says 50 at 6 even. If somebody buys them, I'll say taken, which means the offer that I was quoting, 50 at 6 even, Merrill Lynch, you're hearing me say it. Merrill's got 50 at 6 even, 50 it's taken. It's a simple way for me to explain to you that a great deal has happened there, and I need only one word to do it. Taken also means that we've now gone bid there. They bought everything that was available, and it's now a bid. So 50 at 6 even, Merrill Lynch guys here, I got 50 at 6 even. You hear this on the squawk. Guys, I got 50 at 6 even. We're a 580 bid I throw in there just to let you know, boom. As it happens, I go, taken. Local buys them. So that will let you know that there's no more available at 6 even. Should go bid when you hear the word taken. And 50 contracts traded. And who was the seller? You already knew who the seller was because he was on the offer. The buyer was the local. The exact opposite of that being if they give them. You got Merrill Lynch. He's the 5 even bid now. So we'll stick with this example and try and keep things simple. 5 even bid at 6 even. So 5 even bid Merrill Lynch, 5 even bid on 50, 5 even bid given. Somebody sells them to him. So somebody sold 50 contracts at 5 even. I'd say given. Local sells are given, paper seller. So we now have the distinction between paper and locals. A customer order is a paper order. You'll hear me refer to paper order if I don't know what desk it came off of. For instance, again, Merrill Lynch is a good desk for me. I can watch the desk. I can actually see the orders as they come to the filling broker before they enter into the pit. I can watch Morgan Stanley off to my left. I watch him pick his phone up. I watch him sit there, and you can almost read the guy's lips. The customer's going, what's happening down there? What's going on? Who's buying it? Well, we got Merrill buying it. We got customer goes, buy 50. Okay, checks the order. I got to buy 50, right? He says it. He has to repeat it back to him. Hey, signals to the pit, buy me 50. So again, there's a little bit of lag time. This is one of the beauties of the service. There's a little bit of a lag time in the phone to the clerk, to the broker, to the pit. And that's where one of my, you keep in mind, guys, and I'm going to walk a real fine line here, but the order is public information once it's on open outcry. Once the phone to the clerk, to the filling broker, once the filling broker openly bids or offers the order in the pit, it becomes open information or public information. Now, again, one of the advantages that I have and listeners have is that if I'm sitting there watching, there maybe is 20 offered at 6 even, we'll try and stay in the same, again, example. 20 at 6 even, a small offer pretty much is the scenario I'm creating. And Merrill Lynch, he picks up his phone, or Morgan Stanley picks up his phone, and he goes like this. I'm definitely not going to give that 20 at 6 even very much weight now. You see what I'm saying? Because we have 50 coming in to buy right then and there. I'm not gonna lean on that offer. That's the last thing you're gonna hear me talk about. Now I'm gonna just kind of back off that 6 even offer. Looks like paper buyers, I'll say here, or looks like we have a Merrill buyer coming in here, guys. 6 evens are trading, 6 even bid now. So one of the things that I like to do is talk about the transition before it happens. I don't want to be a lagging indicator. I want to be a leading indicator for you guys. I want to, again, explain to you, Merrill Lynch is getting back on the phone here, guys. He's been a buyer all day long. He's getting back on the phone here now. It may be a completely different customer. Granted, he could come in and sell 1,000 right now. He's been a buyer all day long, guys. He's been a buyer. He bought 5 evens. He bought 6 evens. Merrill Lynch back on the phone. Yeah, he could come in a seller, but chances are he's got that same client back on the line. He's going to come in a buyer. Again, a heads up, a little bit of a leading indicator, possibly. Paper, again, a good term. Just, I don't know if it's Merrill Lynch, Morgan Stanley, or Bear Stearns, or Solomon, or Smith Barney. I don't know. I'm not going to make up a house. I provide factual information only. So it's a paper order. It means it's not local. It is customer. It's coming from off the floor somewhere. I don't know if it's a fund. I don't know if it's an individual trader. If it's a 50 lot, I know it's a big trader. I mean, that's big size down there. 100 lot, I know it's a big trader. All day is a phrase I use sometimes. Again, some of these are written down. These kind of just come off my tongue. I've been doing it for 6 years now, so it's very, the phrases that I use are very common for me, but sometimes even difficult to isolate and figure out what they are, or figure out that I actually use them, and that it's so common for me. All day is a phrase I use sometimes, which just sums up the fact, I'll say Merrill Lynch has 20 on the bid, Morgan Stanley's got 50 contracts on the bid, and I'm looking around the pit, and there's another 10 here. I've got 100 all day on the bid here, guys. Meaning, collectively, we have 100 contracts on the bid. Evens is just a way to discuss a price. 2 even bid is, for instance, right now we're trading, 32 or something, 12.32 roughly. I'm not even looking at the, I don't know what last is right now. Hubert checking it out, but, 2 even bid at a half, I say. 2 even bid, 32 even bid. Small means a light trade, a quiet. Choppy is a choppy market. We've got nothing here. It's locals moving the market around, a thin trade. Very basic terminology that is available on the website. Can be somewhat confusing at times. Definitely very much geared toward a very proficient trader that knows how to place orders, how to again, floor terminology. Let's move on. Some of the uses and applications for the service. This is probably the most commonly fielded question that I've had in 6 years. What's the best way to use the service? It's really tough for me to explain that. Similarly, I come up with, my response always is, what's the best way to use CQG? What's the best way to use, any of the, what's the best way to use Hubert's service? Well, that's really on an individual basis. This service is not, I jokingly say it's priceless for many and worthless for others. This service is no different than a charting service. This service is no different than a commentary newsletter that you receive, or support and resistance numbers that you may receive. This service is a form of, again, as I said earlier, of transmitting factual information in the same sense that the chart is. It's really just a audio version of a chart. We can add much more depth than the chart can. We can provide the much more information than just the tick over time information. How to apply this? There's a lot of ways. One is to if you want to make sure you're trading during busy times of the day, which is, in my opinion, certainly not the case for all traders, but in my opinion, most of the traders do want to trade during the more active times and the more energetic times of the day. That being the case, the service, you have an ear directly linked to the trading pit, directly linked to my level of intensity, if you will, which is directly reflective in terms of the activity that you're seeing in the pit, or would be seeing in that what I'm watching. The service that I run, again, I assume most of you actually, I know you heard it here today. When it's quiet, I'm calm. It's quiet, and I'll make that clear. I'll sometimes even say, guys, it's real light here. It's a local trade. It's real quiet here, guys. Light trade. When we're rocking, it's like, I'm intense. It's cranking. It's like a machine gun. I'm trying to get a half a step ahead of the market. I'm trying to get a half a step ahead of the orders as they come in. And you'll hear a really intense broadcast. Again, versus right now, if we plug it up, you'll hear mostly background noise, real quiet. You might even hear some time clocks ticking. Meaning again, real quiet trade. It gives you the opportunity without trying to have to pull information out of the screen that really isn't there even. So you're forcing something, which, as we all know, is the last thing you want to be doing. This provides you the confidence, the direct link, again, to the activity in the pit. Certainly a reflection on the activity on the screen. Another way is to, again, so that being just the pit audio benefit, one benefit of the pit audio there. Another way is, I actually think that in all honesty, that it's always been my opinion that the best, the service in terms of using it for a per trade basis is best used as getting out of a trade rather than getting into a trade.
Yeah, most definitely.
I would never recommend, because Ben's going, I got paper buyers here, buying. Tends to be the high. Paper comes in real intense, buyers, boom. What happens when the demand diminishes? Once they've gotten it, prices come off most of the time. So a lot of the times when you are hearing at the highs, paper buyers, it'll last for 2 minutes. All of a sudden, you've gotten long because paper buyers. Well, I thought Ben said that when Merrill Lynch was coming in a buyer, that was a good time to buy. Well, if he is an intense buyer, if he is a regular buyer, if he's consistent throughout the day. For instance, this morning, I'll be honest, I thought we were hitting into a trend day higher. The way the guys came out of the gate this morning, Merrill Lynch, I had some good buyers. I had Bear Stearns in the back. We had some good buyers. I thought that they were just going to start it off. Locals got stuck, and I thought that locals were going to have to cover at a point near the high. And what ended up happening instead, the buyers just diminished, and the price came off. So the supply and demand aspect is certainly what drives this market. What we're seeing sometimes becomes the intense aspect of that, which you actually come off from. Again, the paper buyers on the stops, the highs, when all of a sudden, and then we just drift off. That's why I say the last thing you want to do is use that as an in. In some ways, after you've seen that happen a couple times, after you gain confidence in the fact that, these are the new highs that we're making right now are just testing the range and extending the range a little bit on the day. We're not in a trend day higher, and we're not going to continue to make these highs. These buyers up here are probably getting spooked out of short positions. These buyers up here are probably not really intense buyers. They're probably responsive buyers, and to the price, and not initiative, in that they're not driving this market. I don't want to. I feel like I've been doing pretty good, guys, and trying to stay focused here. But there's so much that I think of. Another thing that's really important to me is initiative versus responsive. And one book that I'm going to kind of plug right now is Mind Over Markets. I don't know how many of you guys have read it, but an excellent book in describing price activity and how price movement occurs and what drives prices. And I am going to get off a little bit here for just about 5 minutes real quick. Initiative versus responsive. An initiative buyer is always going to be more intense. He's always going to drive the market much harder, because he's showing initiative. He needs to accumulate a position, or he wants to put on a position. An initiative buyer is going to come in no matter where the market is. A responsive buyer or seller is going to come in only because he's responding to where the market is. A responsive buyer would be, for instance, a short that gets out because the market's making new lows. He's responding to that. I focus on the initiative. I focus on who is the most intense player. How is he driving prices? Is he an intense player in that? Again, we discussed the price activity. It's a 5 even bid at 6 even. In order for prices to rally, somebody needs to buy all those 6 evens and then go bid there. They can't just buy half of them, because if they just buy half of them, we're still 5 even bid at 6 even. There's just half as many offered at 6 even now. If he buys them all and then says he's bid there for 50 contracts, now we have a market that's moving higher, because the next trade or the next offer is up above. So we're 6 even bid now at 6 half, say, okay? Or we'll talk quarters now. We'll get back into mini prices a little bit. So your 575 bid at 6 even. There's 1,500 offered at 6 even, taken. The screen trades, 6 evens traded. Now goes bid 1,500 times. 6 quarter offer, taken. They buy the quarters. 6 quarters trading, quarter bid at a half. Halves are trading now, half bid at 75. You're seeing the market move higher now, is what's happening. You're having intense, or a more intense buyer come in, he's taking offers. That's what drives prices higher. Showing bids doesn't usually drive prices higher. It can if it scares an offer out, but bids and offers are 2 separate things than trades. When you look at the book right now, if we have a book up, the bid's probably 600 deep right now is my guess, whatever the price is, 32 quarter we'll say. 32 quarter bid 600 times, 32 half offer 600 times as well. Again, until you have trade, you don't have price movement. Guys sometimes don't really grasp that. They don't understand that a bid isn't a buyer. A bid is somebody who is presenting as if he wants to buy. I always say that the locals in the pit, when they're showing bids, they really want to sell, because they're trying to, if they wanted to buy it, he'd go, I'll buy him. He's not going to go, I'm half bid. He's going to go, I'll buy him. But if he wants to sell it, he's going to go, I'm half bid. I'm 70 bid now. Oh, you're 80 bid? I'm 80 bid. Okay, it looks like he's got to buy even bid. And if now it looks like he's really got to buy over here, I'll buy some here. If there's a little bit of supply over there, I'll buy him. As he's watching this guy, he's still got to buy him now. All of a sudden, I'm at a half up above. So he rallied the price almost a full $1 by just showing bids, doing a little bit of buying over here, and he had a buyer over here to sell to. So that's market manipulation. No. Now that's it occurs less and less now because of the efficiency of the E-mini. Okay, that used to be what the locals call edge, and that's what they used to pay $3,500, probably $4,000 in a seat lease at its peak to be able to do, is stand there and have that edge. Also, the edge was to be able to buy the bid and sell the offer. So the local's just sitting here with every other local in the pit showing a half bid and a 70 offer, say half bid, and there's order flow that comes in and out of the pit. I'll sell you 10. Boom. I'm long halves, and everybody else is still a bid here. It's a scratch at worst. So he could sell halves to the guy to his left and scratch the trade right there, and they're paying $1, if that, per side. So the locals can trade first and before everyone and for cheaper than anyone. So that's their advantage. We just got into it. A common misconception is that it's cheating, or that it's that the locals know something, or they know where my stop is. I'll tell you one thing: the market knows when you're in and when you're out. That's the only thing for certain. The locals don't know about your stops. The The locals don't know any information. They don't have any insider information. They don't. It's a common misconception. I got stopped out. They knew I was up there. They knew my stop was up there. They went looking for stops up there. Now, don't get me wrong. That is their job. They're constantly trying to raise and rally prices as prices come off, they're buyers from the week longs that have bought into the rally. Week longs, locals buy it on the way down. Now they're long, the locals are long. And all the people that were selling it on the way down now are covering it on the way back up. And now it's making a new high, higher high, lower, higher low, higher high, lower, higher low. Every single time it comes off, the locals are buying it. They're providing the demand. Every single time it starts to rally up, and the people who were supplying them, or the weak shorts, they're letting them have it back. Again, setting up the scenario where the actual highs tend to be kind of luring you in to the wrong position at sometimes. If you're trying to join in with them for a short-term trade, you tend to buy the high. I've done it. I know all you guys have done it. Don't feel like you're alone. The less you do it, the better. I've got one of my best friends is playing Hold'em professionally now online, and his objective in the day is to have fewer and fewer hands that he's in the hand kind of going, you know what, I think I'm going to lose this one. Hey, God, this guy's probably got to. Why? You're throwing away good money after bad, as my father used to say. The fewer and fewer times you find yourself doing that, the better trader you'll become, certainly. The better poker player he becomes. The fewer times you find yourself in trade for no good reason or taking continued losses for no good reason, you're going to find that as much as you can minimize that, again, it goes without saying, the better you'll do. Misconception, again, that I got some of them, sorry guys to flip around here, but, more buyers than sellers. Perfect example of, this is actually getting fun here now. I'm going to have to open us up for a couple questions in a few minutes, unless I make a phone call, and then I could probably extend it a little bit longer. But to get Paul, because Paul needs to go to lunch at about noon here. But if more buyers than sellers, never the case. Again, Merrill Lynch is standing there, his phone rings. What's been going on there? We're rallying, the customer says. Well, the big joke on the floor used to be in response to the customer saying, why are we rallying? We got more buyers than sellers. That's never the case. It's a more intense buyer is what it is. You have a more intense buyer who's driving the market. Again, he's taking the offers. There's always a seller for every buyer, for every contract that transacts. There's no other way to do it. You can't just have open-ended buyers. They do not know where the stops are. Again, we already talked about the difference between the bid and the offer and trade. Let's move on real quick to a little bit of a summary in all this. It's kind of try and bring it all together. I know I've talked about a lot here, guys, and then I'll open this up to some questions, and I'll probably be able to. I'll let you guys get back to what you want to do around noon here. But to summarize all this, it is just another form of information. Again, I could sit here and beef it up as much as I'm passionate about what I do. I really enjoy it. I feel like I'm one of the very few lucky people in the world that can say that when they go to work, it's not work. I mean, this is something that I joke around and say that if they let us drink beer at the desk, I'd probably never go home. For me, I really enjoy what I do. When I turn the switch on, I couldn't change my broadcast for $1 million. I do it because of the way it just comes out of me. It's, again, when I turn the switch on, I sometimes don't even look at the clock till they ring the bell, I have to force myself to figure out, I have to pay attention to where we are in the day. I could lose a whole week sometimes quoting. Luckily, there's people out there that want to listen to it. And so that pays my bills. And so, again, I'm very lucky in that I can do what I love to do, and I can support my family, so on and so forth, and save a little here and there and vacation, so on and so forth. This service isn't for everyone. It's, again, as I said jokingly, it's priceless for some and worthless for others. It is just another form of information. I say that we sell confidence. We don't sell squawk service. I sell the fact that when you turn your computer on and log onto the website, first of all, I sell that it's going to be there. You can confidently be aware. We've been doing this for 6 years. We have it down to where we don't have outages. We don't have issues where connectivity issues. The service is reliable. The content is factual. You're never going to sit there and hear me say, Merrill's got 50 at 6 even. And it's not the case. I don't lie. I don't make stuff up. You're going to be able to, at certain points in the day, you're going to be able to hear triggers. You'll hear things that gee, last time Ben said this, or I remember last time Ben said this, we rallied. Ben just said it. So in the back of your mind, you're anticipating a little bit of a rally here. Don't get me wrong. I'm not saying trade off of it, but after a few times that happens, you're going to be able to be half a step ahead. And that's what we're trying to do, is just get half a step ahead of this market here. Part of that is having the confidence that what you're hearing and what you're seeing is factual. In the same way, I'm required to compete with the fact that when you look at a CQG chart, you rarely doubt what you're seeing there. I know it because I do the same thing. When you listen to me, you're not going to doubt what you're hearing there. It is a very excellent service that people, my diehard traders, call me and say they won't trade without it. And again, those are in the diehard group, I say. The service, again, is available to you guys with John through Trade the Markets. We're offering a discounted rate of $75 a month, which is a $50 discounted off the normal retail rate off the website. Unfortunately, you have to contact me. We don't even have to get into that right now, but it's, I encourage it. I encourage you definitely do a trial before, just to make sure that, for one, that you can receive the service, that you don't have some sort of internet difficulty, which we never have or rarely have. The other is that you get a feel for it and you see that it's something you like. It's a monthly renewal subscription. And again, I encourage all to have a listen. And I really appreciate the opportunity. If you guys have any questions, shoot, go ahead. I got 15 minutes. Go ahead.
You have a lot of different services.
Yes.
Which is the one?
I do the PIT broadcast, which is under the Real-Time Futures name. The other service that we have is a mini broadcast. So again, you've heard me talking for the past 40 minutes about the PIT. The mini broadcast is under the name Squawk-E, S-Q-U-A-W-K-E. It is a commentary of, he's quoting, the differences in the two products are many. One is the broadcaster. The other is the commentary. The other is the content. The prices that he discusses are the mini prices. The other is in the mini broadcast, he can't say it's Merrill Lynch buying or selling. He doesn't know. He doesn't know. No one knows. What he can do is he has access to a trade filter. So he can watch, and say it's 6 even bid at 6 quarter. 6 evens are bid for 1,500 contracts. All of a sudden, brrr, the thing goes. It's now at 6 even. So the bid went, bid traded, it became the offer now. Did it just get pulled, or did it actually trade? So he'll go, we had institutional sellers here, we had light sellers here, they sold 500 of them. Different information. He has he can look at the boards a little bit more. I have to focus more on the PIT. He can watch some of the other news services. He gives a wrap up throughout the day. Again, just a different format. Go ahead.
Can you trade your actual money?
I can, yeah. I used to trade and Squawk, and I think trading requires 100% focus and commitment, and the effort required is just in the same as squawking. You can't do them both well. It's impossible. You have conflicting interests at times. You have it's too tough. Trading is too difficult. Being a squawk broadcaster, a quality squawk broadcaster, is too difficult. I found myself squawking, sitting there going half bid at even. I was more focused on my trading than I was on the service. So it was conflicting. I certainly will trade at some point again. That's the reason I'm on my seat right now, is I expected to be trading about 3 months ago, but the arrangement that I had just fell through. And so now I'm just sitting on the seat for my business.
Do you give any general guidance as to how prospective customers could use your service?
No, not really. None other than on a one-to-one. I really encourage guys who use my service to call me, to contact me, because as you guys can see, I love to talk. And again, I'm also very passionate about what I do. So for me, it gives me energy to sit on the phone with one of you guys at 7 o'clock or 8 o'clock at night at my home talking about this. it fuels my fire to get back in there the next day. It's energizing to hear, hey man, great job today. I really appreciate it. When you said Meryl was doing this, I did this and it worked, and I've been lucky also in that. I'll just give me a couple more minutes here, guys.
Fine, man. We're getting ready to ask you questions.
Okay, my customer base is the best. I don't know if it's something that I've done or how it's happened, but the customers that I've acquired are just the best guys. I don't have guys calling me up and complaining. I don't have guys, that are whining about you did this and because the service, it's in your lap. I'm just providing. You wouldn't call CQG up and say that I'm mad at CQG because they printed high bars here and I got long. Again, it's your own responsibility. You have to make the trade. You're the ones that are out there.
If you do make the mistake and call in Ben, you will never ever get a word in edgewise. You're like, whoa, hold on, wait a minute.
Go ahead.
Ben, how many locals are there, or how many market makers are there?
There's roughly on tomorrow when the Fed comes in at 1:15, there will probably be, let's say, 200 locals in the pit. Tomorrow morning when you guys go down there, before the Fed meeting, there will probably be 75 in the pit.
Just wealthy individuals, these locals? Or
Yeah, most of them are backed. Most of them are backed by, some of them are actually backed by filling brokers. So they stand in front of the filling broker that's backing them. You see what I'm saying? He gets half of the cut. It's, you talk about criminal. But, who is he going to trade with all day? Who's he going to give the juicy trades to? The stranger across the pit or the guy who's making 50% of all trades on, The cut's usually not quite 50-50. It's usually more like a 60-40 cut. Very common a few years ago, not so common right now.
Would you call that as local to local? Or is it
No, that's paper to local. Yeah.
So what's local? That's
Local to local's
local
one.
to criminal.
Yeah, local to criminal, right. Local to local is a trade where two locals are trading with each other. There's no paper involved. Paper rarely trades with paper. It's rarely Merrill Lynch and Morgan Stanley going, hey, I'm half bid on 50, and Merrill going, I'll sell you 50. It's always the middleman involved. Just in the same way, you guys don't deal with Ford directly, the factory. You deal with the dealership. You know what I mean? The local's the dealership.
One of the things, too, you talked about this, and Ben was talking about it earlier, for some people the service is worthless and some of it's priceless. And originally, Hubert was the one who would always listen to pit noise, and he'd get me into listening to it. And for the first 2 months, I told you it drove me nuts. I'm like, this guy just doesn't shut up. I mean, he's always talking. And then it got to the point where when I'd turn it off, I would miss what was going on. Because like, when the market was going higher, I'm going, oh, is the pit louder here? Has Ben telling me that the stuff here has been taken? I didn't know, and I actually felt I missed you. And
that was nice.
And at that point, so we turned it back on. And then the good thing is, when we finally, we said, hey, we really like working with Ben. Let's give him a call. And it was funny. The first time we called him, Hubert and I had him on speakerphone. We're sitting there, and it's like, but well, what would like to do?
Yeah, no, that's not uncommon. My father used to joke and say that I was circumcised with a phonograph needle. or vaccinated, he would say. Sorry, vaccinated.
Circumcised, vaccinated,
whatever. My head's always in the gutter, too.
That's a Freudian slip.
Right.
Here's how I use him. When you first start using him, don't really pay too much attention to what he's saying. It'll take a good solid 2 months to get used to what he's saying. Like when he's talking, telling what all's going on with the market, just like he said, I subconsciously know what he's talking about, okay? I know, taking, giving, Merrill, this, that, and other thing. Listen for the pit noise behind him. If prices are increasing and the pit is getting louder and prices are being taken, good chances it will go higher. You never want to go long on a pit explosion of noise, like real loud, long, real loud noise. You pretty much want to fade that a lot. Or if you're in a long and pit noise just gets real loud and you have a lot of paper buyers come in, you want to exit your position at that time. You try to exit at the apex of the noise, okay? So first, just try to get used to listening to the noise over the guy's shoulder, okay? Give him at least 2 solid months, because you are going to hate it in the beginning. And then after about 2 months, you will pay him whatever he asks you to pay. All right? I love it. I can't trade without it. I mean, if I had to, I would, but I prefer to trade with it all the time. Okay? I'm more confident in what I'm doing. I'm more sure of myself and my trades when I use pit noise. When I don't have pit noise, I'm not as sure or as confident. without using pit noise.
You know, the other thing, and this is something I was thinking of, John or Hubert, as you were saying that, one of the things that pit noise and this receiving data in this form does is it opens up, and this is where my bias gets really firm here, strong here, is that it opens up your mental capacity to receive so much other information. You're no longer required to sit there and focus on this chart because the squawk audio is coming out of, you're getting that information out of the pit, out of the other corner of your room. You know, it allows you the ability to, again, the visual capacity to focus on something else, which wouldn't we all want to have, you know?
And part of the theme that I've been talking about in my trading is I like to put on a trade and like walk away or just go do something. And part of what I rely on now is if I'm in the kitchen or down the hall or whatever, I'm listening to the live feed coming through. And if I hear Ben getting excited and talking about all the stuff,
with
I know
trade on
going
or
on in the markets.
without trade on as well. You know, I mean, if you're just, you think, hey, it's lunchtime, nothing's going on here, guys. You know, and you're dependent upon a chart. The second you turn around, you have no idea if it's still lunchtime or if a bomb dropped somewhere. Versus if you got the streaming squawk audio in the background, you know. I mean, there's no question you'll hear it if there's activity that occurs or whatever. So again, lack of or the presence of, you know. Go ahead.
Yeah, you just mentioned that. Well, you've been there for 6 years. When news events come in, what do you see happen?
Flurry of activity. You know, irrational exuberance. Was awesome. You know, 9/11 we didn't even open. So it was all on the panic was on the computer. I've seen a few things down there. It is just it's a flow of just absolute panic. I can remember a couple unexpected interest rate raises or
January 2000, the half point intraday.
I remember it was a 20 handle wide market. So for instance, today the S&Ps are trading 1232 even. You know, and a dollar's worth 250, or you know, every dollar's 250 in your account. We were trading 12.10 even at 12.30 even. The locals had it that spread that wide for 30 minutes. You know, it lasted for about 20 minutes or so. 3 years ago, a dollar spread very common in just the everyday quote. 5 even bid at 6 even with everything in between the 5s and the 6s trading, depending on what area, with either the offer or the buyer, when they meet. Again, when it's a 5 even bid at 6 even, you're going to have 80s and 70s and 60s and halves all trading in there. Not everybody comes to the outer extremes of the market there. I just shored up a few more minutes here.
All right, thin market.
Thin market's just a very quiet trade. It's you know, it's right now. It's very thin down there, meaning if somebody needed to execute a big order, they were going to have a tough time because the locals can manipulate the market. There's very little activity down there so that everything does get noticed. Even you know, the littlest thing is going to get noticed. If Merrill Lynch starts getting a little uppity and he starts, you know, selling 10 here, 10 here, but he's not really backing off at all, and he's still kind of looking for bids, and his eyes are, you know, starting to move around, and he's looking at the cash market a little bit. The locals are going to feed on that, you know, and they're going to try and manipulate that, and they're going to try and get ahead of them, and they'll try and sell.
Light high or light low?
Well,
pretty much the same thing as a thin high or thin low.
Light on the highs, yeah, and light on the lows. Just again, a very light trade. Versus, you know, the more intense, the more energetic trades, and those are the ones that you're really looking for. The market movers.
We've already went over this. Local to local.
Local to local trade again. Just two locals trading with each other. Usually no impact whatsoever on the market.
Local stuck short.
Local stuck short's a great term.
And a great opportunity.
and yes, and also probably one of the more predictable situations and one of the easier ones, stuck short or long, keep in mind, one of the easier ones for me to isolate and to be able to report. This morning, a perfect example. Merrill Lynch and all the other buyers come in doing a lot of buying right off the open. Well, the locals are the market maker. So they're the ones who are going to be selling it to him. Now,
so I take this. So I'm selling it to him.
I'm a 5 even bid on Merrill Lynch, and I'm 5 even bid on 100. And Hubert says, all right, well, I'm at a half, and I go, I'll buy them. Now Hubert's short, and I got more to buy. I'm still 5 even bid, and now Hubert's got to do something too. He can buy halves. I'm 20 bid now, guys. I'm 30 bid. I'll buy your halves. Now all of a sudden, Hubert, who was at a half, he's not at a half anymore because I'm buying halves over here, and he already sold me 50.
So price is going higher on me.
I'm half bid now. half bid,
still
70
short.
bid, 80 bid, 90 bid. I'm buying. Hubert now is one of the locals who was providing the supply. He did get short. He was selling to Merrill. Now Hubert's got to buy as well. The locals get stuck short also. The locals don't always make money. That's a misconception.
Locals are no smarter or no dumber than you are.
What they do is they're instantaneously measuring supply and demand. They're looking at faces. They're looking at, they know certain positions within the pit, and they're instantaneously making determinations on what to do depending on that. If Merrill Lynch is coming in a big seller, is Merrill Lynch, chewing on his finger? Does he, has he got a little more to do? Is he sitting there eyeballing the cash all the time? Is every time we come down near our lows, does Merrill open up that deck of paper and check that order that's down there, and is that really 500? Yeah, that's a good order, and so that's what they're doing. That's what they do very well. Go ahead.
Top tenors.
Top tenors are my biggest guys in the pit. That's a great question. They're 100-lot traders. They're guys that will take a 100-lot, no problem whatsoever. They're guys that my paper fillers, Merrill Lynch, Morgan Stanley, my big paper fillers, they go to because they need them. If Merrill Lynch has to sell 200 contracts, he doesn't want to go, I'll sell you 5 to the little guys. 2 there, checking, was that 2 or 1? The market's going to get away from it. He wants to go, what's there? What's bid? Boom, sell you 200.
You didn't get to be the top tenors by not knowing what to do.
By being good, by trading with the big paper,
You have any favorite guys that you like more than others?
Yeah, I like Borsellino. I mean, he's great. Talk about an all-time market mover. He can push the market lower. He walked in the pit today and drove the market 4 handles lower and walked out 20 minutes later. He came in. The guy, again, he's just an excellent Borsellino. There used to be 2 brothers, Louie and Joey, but we used to call him Big and Little Italy. He has a book called. I can't think of it. Pitbull.
Pitbull.
Something like that. Yeah, one of those. Go ahead.
Did you get resistance for setting up your business?
Handles a point.
No. The Merck's rules are that, I did it from some guys, from the Borsellino specifically, but the rules in the Merck are that you have to be a member or a clearing firm to distribute Squawk Box services. The Merck's perspective on it is that it probably brings them more business than it hurts them. It definitely, I think if anything, the Mercs, they don't regulate it. You're required to be registered. They don't charge us fees, surprisingly, versus some of the, they've given me some of the figures that their other data vendors, provide them.
Right.
The fees that they receive from them. It's just incredible, the amounts. But yeah, relatively unregulated. By the locals, it's a little different story. I mean, some of the bigger locals, that was one of the reasons why we nicknamed them Little Italy. Praz used to be Checkers, a couple of the bigger guys. Mainly because we didn't want to call them out by name. It just wasn't fair to them. I actually did have one of the Borsellinos come up to me at one point, and he made it clear that I'd be swimming with the fishes if I ever cement shoes in the Chicago River. But he was just, he used to have a trading room, and he used to have clients that listened to me at the trading desk in his trading room, which, again, it was a 50-50 split probably for all the traders that he set up, and they were all trading minis. And, and I just said, Borsellino's putting on, he's coming in, he's getting short here, he's getting short, Borsellino. I was talking it up a little bit. So it kind of just came back full circle, and the guy said, look, I'm a customer of yours, so I don't get me wrong, I value the service, but if you ever mention my name again, so, but that was the most threatening of all my 6 years of Squawk.
Put that on your notepad. Do not mention.
Yeah.
Do not mention. Let's see, what else? Anything else?
You're going to see, yes, tomorrow we'll figure all this out, but I've got...
will one day we see go...
What's your opinion?
My opinion, again, I've got a vested interest in it not. Except for the fact that, again, we are in the process of transitioning this business to where the factual information that we're providing is not just pit-based. So, and we're finding with this E-mini Squawk product that there is a market out there for. Some guys sit and say, what do I need to hear some guy quoting the dome for? Well, again, it's very similar to what do you need to hear the guy quoting the pit for? It's a different form of interpreting of information coming in. You're not focused on watching the dome any longer. If you know that when Ben's saying 2 even bid at a quarter, it's 2 even bid at a quarter. And if I were to look over at my dome, that's what I would see. So why do I need to watch it? I can watch this while I'm listening to this. Will it ever die? There are buttons.
The service, the open out
Will it ever die? You see the buttons on the traders out there that say "Open Outcry will never die." The Mini has changed the market. It has changed the pit. It has changed Open Outcry big time. There's less edge in there for the traders. The edge being able to sell the offer and buy the bid all day long. There is less liquidity in the pit right now. Personally, I can't attribute that to the birth of the Mini or to the floor losing its value or its purpose. In that, I attribute it more to the fact that fractions got taken out of stocks, and that killed so many stock traders. I attribute it to the fact that you don't see the E-Trade commercials anymore, where the kid's got his helicopter parked in the backyard and he doesn't want to go to school because he's trading stocks and he's making $1 million. I attribute it to the fact that the less activity on this floor is the fact that there's fewer guys, again, just out there trading stocks. I used to know, one of my friends who's up in an office right now trading, does a spread. His girlfriend, he used to come in with horror stories of her trading Walgreens, 10 and 20,000 contracts at a time at Walgreens. This girl hasn't placed a trade in 3 years, so where's the business gone? Is it going away? No, it's just in different places right now. You look at New York Mercantile Exchange, you go over there right now, and they're absolutely oblivious to the fact that computers ever even exist on the trading floor. They are, and don't get me wrong, I don't mean to be insulting because, they're good to me there, but there's no cameras on the trading floor. It's essentially what the Merc was 20 years ago. Will that change? Yeah, no question at some point. Why? Because the screen's so efficient. It enables you to trade in a way that you couldn't trade 10 years ago. With the spread capabilities that are out there right now, markets are kept in line tighter. Again, the efficiency is the rate that increased, with the auto spreaders and some of the other stuff that's out there. And a lot of the guys right now are developing their own systems. They're not just sitting on TT using their auto spreader. They're having people write these systems so that they're faster than TT, so that you're not dependent upon TT or some of the other front ends. And that's what the professionals are doing.
TT Technologies, X-Traders.
Trading.
What I was trading on this morning.
Yeah, trading technologies.
Yeah. You have any good smoke and mirror stories?
No, I mean, I got a lot of good stories, but they're not, there's,
We can edit them out, don't worry.
Misconception of the, is definitely that there is some sort of a know-how or some sort of stuff that occurs that people don't know about down there. And it's really, it is, don't get me wrong, it's a good old boys club, and I joke around and say they're all in the Crybaby Millionaires Club, but they're all whining, oh, this isn't, things aren't as good as they used to be. And, I was talking to a guy the other day, I'm like, how you been doing? He goes, not real good. He goes, times have been tough. And I said, oh, yeah, well, what do times been tough mean for you? He goes, they're tough. He goes, what do you mean? He goes, don't worry, I've been making my $2,000 a day, but times are tough, Here's a guy that's used to making $5,000 a day trading down there, in the pits. So, in my perspective, that's still a great day, So
it's all relative, right?
Yeah, no, but and again, it really what the locals do is they take hit after hit after hit. They'll take a lot of small losing trades, and the one big one gets back for 10 or 11 of the not good ones. They get out of their losing positions immediately. They have no reason to hold a losing position because they'll just take the other side of it immediately. If he's long 5 and somebody's bidding on 10 contracts over there and he thinks it's going lower, sold. He's now reversed his position immediately, and that's what the locals do. They can get in and out of trade faster and cheaper than anyone, and that's a major advantage. In addition to the fact that the fillers come to them, they ask what's their price.
I guess then that they're making their money in the long run, or else they wouldn't be there. So they're really picking off money from the big institutions, right?
Yes.
They're kind of bottom feeding with the big.
Yes. They used to. A lot of locals used to make a lot of their money off the one-lot traders, which are a lot of that's on the screen. Don't get me wrong. There's market makers. There's locals on the screen. There's they're different. They're measuring supply and demand and providing a market on the screen based on another market, on another spread.
That's what tape reading is. Measuring the supply and demand in real time.
Mm-hmm. Right. Go ahead.
What percentage make money? The all locals in the
No, misconception. For every 10 that go in, 2 stay.
So
Oh, for every 10 that go in, only 2 stay.
You got to remember in the pit.
Locals.
I mean, you talk about herd following mentality. I mean,
Yeah.
that's the biggest one right there.
Yeah.
I mean, everybody in the pit's watching what everybody else is doing.
Yeah.
You'll hear Ben talking about sometimes. I mean, one of my favorite times during the day is when he's like, "Oh, I got one of my Big Ten guys who's stuck short." I mean, that's great because there's big size coming in and trying to cover that. So just because they're a local and they're in the pit doesn't mean they're smarter than everybody. They're making money. They do have the first in, first out advantage.
Yeah.
But yeah, the people. It is a low success rate of people who survive in there.
Yeah. No, it takes a very, a certain type of person to do very well down there, and it's definitely not. It's not the numbers that go in. They don't all make it for sure.
Who's the oldest guy down there? I mean, how old?
In the pit, a local in the pit. I don't know. I mean, I'm a bad judge of age. I'd say your age. I mean, there's guys all the way down to 18-year-old, punks that are the son of, Joey Bag of Donuts, and now he's in there and he's got a seat and he's,
How's it go?
You guys like that one, huh? I'll show you Joey tomorrow. He sits over in the corner. I'll show him to you.
Apparently he's large.
Joey Bag on?
No, it's nowadays there's less of the experienced traders. I'll say in the corn. Well, actually they open up at 9 o'clock. Not the corn. I'm sorry. In the meats, the live cattle, the hogs. More of your older traders are over there. Mainly because they started the Merc out, and these are guys that have literally been trading down there for 60 years, so, and those are the full members, and, but so on average, probably 30, I'd say.
At this point, we're pretty much out of time. We got to get going in order to the Chicago Board of Trade.
One more time, real quick. Do you have any products for the CBOT?
Board of Trade, we have the bonds. It's a combined broadcast of the 10-year, 5-year treasuries and the bond product.
You have any Euro products?
We have a Euro options product and a Euro dollar back months product. The options product's just about to get started.
And the one you do is?
Is the real-time futures, and that's the pit broadcast.
Okay. All
That's
right.
what we're listening to this morning.
I use him, guys. You guys actually, believe it or not, you guys pay him less money than I do because I feed it through the room, which there's a lot of people in the room. I feed it like the first 30 minutes, the last 30 minutes, and then the doldrums, which is like 11:30 to like 2-ish. Definitely give him a try. He's got a 2-week free trial. I use it every day. I mean, I would not recommend anybody's service that I did not use, and you guys actually pay less for it than I do. Okay?
Guys, thank you. I appreciate it.
All right, so first thing we want to just set this up with is strong growth in the futures industry. How many futures traders we got in here? Everybody? Ooh, getting close. Okay. And the mainline story is that not just CBOT, but really all the exchanges globally who trade futures and futures options have had fantastic growth in the past. This chart is past 4 years. And they've got 25% growth. We've got here the statistic, the bullet, over the past 5 years. In 2004 alone, you could look at a statistic then. I saw one of Barron's the other day that said there was a 7% increase in volume in the stock indices, in the stock market in 2004 versus double-digit growth continued on a year-to-year basis in the futures industry. And this kind of splits down. This little pie chart will show you between interest rates being the major blue piece of the pie there. Green being market indices, equities, and currencies. Big growth, 26% there. Metals and energy, 11%. Ag and other, 7%. Oops, and the interest rates were 56%. So, we've got, why would you expect to be seeing this? You've got, market conditions, market volatility, political uncertainty, basically just people trying to manage their risk, whether those are, institutional or professional customers trying to hedge themselves and their price risks. There's just a lot of different things. And then you've also got just a lot of trading opportunities that have been created through all this demand for people like yourselves to come in, the growth in the electronic trading, being able to trade electronically, and having a product offering in the derivatives these days that is smaller size, all the mini contracts, things like that, smaller products with smaller margins and smaller size that are just more accessible and more manageable for an individual trader.
Can I make a comment on that?
Sure, John.
No, we've seen very strong growth, as she was mentioning, across most of these users. Not only from the institutional user, where traditionally you had, if you're an institution, you want to participate in the markets. As she was saying, there's very large interest rate participation here. These are people who are banks that are loaning money. They're very, very knowledgeable about these products, and they are hedging that risk that they take on when they put out a loan. Interest rates obviously fluctuate. That affects them. They hedge that risk out in the future using the futures markets. That's a big area. But at the same time, to do that, many of these banks had to have floor trading operations to be able to move that large amount of money, that large amount of contracts here. That became very labor intensive and very costly. With the move to electronic trading, not only is that helping the individual have access from a remote location, be able to access these markets, but it's also allowing mid-sized to larger businesses on the institutional side have their risk manager have access to these markets directly from his desk, so he can alter that portfolio at any time, therefore it's not such a burdensome project having all the people in-house to be able to have a division in Chicago to be able to access these markets. So even on the institutional side, the electronic access has really helped broaden the base of the people who are using these products.
And we'll get a little bit more into that too. So just going then from the global perspective, the global futures industry into CBOT then, looking from 2001 to 2004, you can see fantastic jumps in annual volume, in average daily volume, and in year-end open interest. And that really splits across all of our products. It splits across open auction, electronic, EFP, which is the exchange for physical market, and then across the products, commodity, interest rate, and equity. So that's sort of CBOT's view of the world over the past couple of years. Fantastic growth. Average daily volume in 2005 is up 181%. We've been setting all sorts of open interest records, daily volume trading records. It's really a story you hear at CBOT and really at a lot, again, globally at a lot of the futures exchanges. And the interesting piece, and to pick this back up as what John sort of mentioned, is the main growth, as you can see here, is really coming from the electronic trading. And some people are still sort of surprised when they take a look at this. CBOT's history is in the agriculture products. Everybody's seen the pictures or has the association of seeing the traders down there screaming on the floor using the hand motions to trade. So when they hear that CBOT on an average on a daily basis is 50 to 70% electronically traded, that comes as a surprise to many people. But this is obviously the area where the majority of the growth has been coming from in the past couple of years. And if you take a look here then at this platform mix, you'll see here that 2001, this is how fast it's changed. In 2001, over 75% of the volume on the exchange was open auction, and now we've flipped it, 2004, 58%, and rising in 2005 is electronically traded. Now, on the CBOT perspective, again, where did this come from? Well, a lot of it's technology. As many of you may know, CBOT got on a new electronic trading platform in 2004, which gave us a lot of additional speed, a lot of additional functionality, and with which we were able to broaden significantly our global network and distribution. So suddenly you've got more increased speed and functionality for current traders and the ability to really on a global platform access new traders and liquidity pools and grow markets that we weren't able to grow before. So that's in the background of sort of what's happening with this mix. If we take a look then and sort of drill down into what CBOT actually trades, what our product complexes are, ag is this is where we were for 100 probably 125 years was soybeans, wheat, rice, corn. Those were the core products, and this is what we'll see when we go out. We added South American soybeans, which is our first product with an international delivery point just this summer. What we call our benchmark complex these days is the interest rate complex. Trade the 30-year Treasury bonds, 10-year Treasury notes, 5-year, 2 years, 30-day Fed funds, and 10 and 5-year swaps. And these are futures and futures options. When we say options at the Board of Trade, we're not talking about options on a cash product like you would be at CBOE, where you're talking about like a stock option or something. It's an option that's linked back to the futures product. Equities, the Dow and the mini-sized Dow futures and options, and then the precious metals complex, currently futures only, in full and mini-size gold and silver. And these, it's a very diverse product base, and it's been extremely positioned, was positioned extremely well for growth in 2004, and the type of things that were happening in the world economy, Greenspan raising rates again, war in Iraq, all the gold market, the prices shooting up, commodities being under great demand. This was a really, really well-positioned, diverse product base for us on which to grow on.
You saw in the diversity and the growth of the hedge fund industry really played into that as well. You see, she was talking about open interest. You really saw the people who have to report, people with large position size actually have to report who they are when their size gets to a certain level. So you really saw large institutions and funds participating in these markets very dramatically as we had a weaker stock market, as they weren't able to bring up much of any gains last year until the end of the fourth quarter. And then a lackluster first quarter this year, you saw them continue to participate in these markets, and that's part of what's driving the open interest to stay at such a high level.
Mm-hmm. So just drill down a sec. The interest rate complex is the one, again, where a large majority of our growth has come from. You can see interest rates in blue, commodities in red, and the yellow over time increasing as we get into trading the Dow and the mini Dow complex. And again, the interest rates, not only the market volatility and everything that's happening at the Fed, but also the electronic platform and being able to hook in traders in Asia and in Europe. A lot of the open interest holders and the people in this contract, or in this complex, are international. Our international participation, people that want to be hedging their treasury holdings, their U.S. dollar holdings with CBOT futures products.
Or anyone who has a currency pegged to the U.S. dollar.
Exactly.
Well, are you speaking of foreign governments?
Yeah, very much so.
You see a lot of that. I was making a little joke to her about IPEX and other people who have interest in currencies that are pegged to the U.S. dollar.
Okay.
You see a lot of Asian participation, and anyone really who does business with the United States on a large level, they have interest rate exposure here and they have currency exposure here, because they're taking delivery of U.S. dollars or anything like that. So
Their exports.
Exactly.
Yep. Again, growth in the agricultural products. One of the big initiatives around the exchange in the past year has actually been electronic order confirmation and trade matching. When we go out and look at the floor, you'll see a lot of the traders down there using something that looks like a PDA to replace the paper cards that they used to record the trades on, and more computers and screens ringing the outside of the pits to bring the orders in and get them back out as quickly as possible, so that the only thing really left that's done with human interaction is just that, that last actual execution, and then it's electronic there and back. Yeah.
At night when you place a soybean order, it's electronically matched.
At night, the overnight market in agriculture is on the electronic platform.
During the day, there's no electronic matching.
Correct. Right. Sort of a hybrid of electronic and the open outcry. Okay. And the Dow. We hit over 100,000 in average daily volume this year in the Dow as an average. We saw a record high, I think, in March or May. I can't even remember now. Get them all confused. So the complex since its launch in 2002, in the past 2 years, has done fantastically. And we think it's a fantastic tool for individual traders like yourself. Two things that I wanted to mention specific, to the Dow and the ongoing growth. Again, with the platform and the added functionality and the global distribution, we're also seeing a lot more interest in trading the Dow internationally. When you go over to Asia or to Europe, the Dow as such is really what's seen as sort of the U.S. benchmark for a lot of those traders. And so it's a very easily recognizable index and name for a lot of those traders to get associated with and trade. We did launch electronically traded options on the mini Dow in February of 2004, which was really the first electronic option product 100% electronic option product that CBOT launched, and it takes advantage of a lot of the functionality that we added onto the system when we got on the Life Connect system last year. There are embedded option strategies on that platform so that you can eliminate the risk of legging in. You can actually put on an order, put in a trade into the electronic options. And then there's market makers in there that can also respond to a request for quote if you're trying to actually trade an option for which you don't see a price level currently being quoted for. So that's really the first thing if you haven't seen it and you want to check it out. We have, just like we've always had the free quotes for the mini Dow on our website, we've also got them for the mini Dow options. So if you want to take a look sort of at where that market is at, then that's something that you can do over the website. And the other thing that I want to point out that applies to all of our complexes but really comes across a lot with the Dow is if you are spreading between any of the CME like the S&P and the Dow or the Russell, the NASDAQ with the Dow, we now have common clearing with the CME. We have since last year, and there are margin breaks that are applicable that can take your margin down like 95% if you're actually trading the Dow against the S&P. So that's the other thing. We call it the CBOT CME Common Clearing Link, and that was introduced at the same time we got on the new electronic platform. And so if you're trading those two different markets, spreading off of them, make sure that you're asking your broker about the margin breaks that you can get associated with those markets. And that's, like I say, applicable for the fixed incomes and the equities, but where I really see it making the biggest difference or being applicable for most individual traders is in the equity markets.
And that would mostly, for you guys, probably that would be mostly important if you were holding positions 2, 3, 4 days or whatever, and you had different positions that you wanted to stay in, or you saw an actual play where you might be long a couple of Dow, short a couple of Russell or something like that, and you wanted to hang on to that. And in the position in each case, if you had, let's say, we're trading, your normal size in each contract, and that was coming up against your margin requirements, and you actually were using it as a trade or as a spread, and you're wanting to keep both positions. That's one way that you can just, if you had a broker that wasn't with a clearing firm and wasn't, directly doing that, his boss might just be saying, hey, this guy's got 6 contracts on, rather than looking at it as a spread. And so you can, in that case, you could just bring that up to him and say, I'm trading this as a spread, and carry on.
Precious metals. We've actually traded precious metals at the Board of Trade since the 70s. Both silver and gold. Again, these are new contracts, though, then from the electronic side. We just launched the full-size gold and silver in October. The mini-size gold and silver had been around since fall of 2001, I believe. So all the things that you know about electronic trading already, transparency of the book, actually being able to see the bids and offers that are out there, the size that's out there, being able to put in an order and have it immediately executed, have 2 different sizes, a mini and a full-size contract, so that you've got a choice and some flexibility between, what type of risk and account size that you've got. And we also, again, are offering out the live books. If you want to take a look at them, they're on the CBOT site for you to take a look at both the gold and the silver.
One of the reasons that you see the large volume increases is the ease with which you can use these products. And the electronic gold contract's a perfect example of that. I was a broker for a long period of time, doing it with telephones and brokers in New York, and trying to explain to a customer why it's been 27 minutes since he placed a market order. and it was a 10 lot, and the market's now, $4 away from that. And you may have gotten some information that he's stopped out, but he doesn't know where he's gotten in, and trying to explain how that works is a really tough position to be put in. So the fact that you can, the market might be wider than you like, it might be tight at exactly what you want, but in this case, it's once again the speed of communication, that you know what's available, so that you walk into a position or a trade with both eyes open, knowing what's available. That really has made participation in some of these markets available to people. I mean, a lot of people were very uncomfortable with, absolutely everything was being done appropriate. There was the possibility of human error, but it was not rampant or anything. There was nothing underhanded going on. It's just human interaction takes a long time, and to communicate that along the chain of command that was necessary took forever, especially in busy times.
The open outcry on gold takes place where, on the COMEX?
Yes.
And did you have to get some kind of concession from them in order to be able to do this, or?
It's a separate contract. It's the same size, but this is a border trade contract.
So what I would want is, if I wanted to specify electronic, I would just use a different symbol or something?
Correct.
Yeah.
Your ticker symbol is going to be different.
Okay.
Right.
So do you then, several of your products obviously compete with similar products on other exchanges. Do you have an active program to try to market your product a little bit better? And
they are now a for-profit company. Yes, they do.
Actually, this is the only one. I think this is the gold and silver are really the only ones where there's a direct competitive comparison.
Because of the contract.
And the Merck's.
Yeah, but
and
those
the
are
S&P.
but those are they could be
but these
more
are
complementary in trading than true
these are
identical.
exactly the same contract size.
But
Do you take physical delivery of the gold here?
Well, it's in New York vaults. Okay. The vaults are actually the same as COMEX, but they are physically delivered contracts, correct?
You do not want to go through that process, though.
No,
I've been through that process. It's not pretty.
How are you going to do it for the oil complex and cut the New York Merc out of this?
All I can tell you is that our first energy contract was ethanol, corn-based ethanol, that we launched this year. That's we're in it for the long run with that.
And she said first.
Our first contract was this year, corn-based ethanol, which actually trades then out of the corn pit, and so those guys have got the hedge right there with the corn and the ethanol, which is very interesting. So our first energy product. But so we've been happy with where we've been so far with both the gold and the silver. We've seen a very broad base of participation in the contract. So we've got individual traders in the contract. We've got professional, institutional, we've got the arbitrage, we've got commercials, actually, with the bullion positions or gold desks, some of the larger banks. So we've been very happy with the breadth of participation that we've seen in these contracts.
Is your market maker program still going on in the gold and silver?
It's a catch-22 with the new. Yes, we have there are market makers in there. As it's a tough thing to launch new contracts, and to provide a marketplace when you go in to trade them electronically. That's basically what you are forced to do these days in any new contract is provide a market maker who will simply provide some level of decent bid-ask spread and size so that when you go in there, so. Yeah.
But once that's done and you provide the electronic access to it, you find very quickly that the electronic volume will start to build.
Can you briefly describe how such a delivery happens?
Gold and silver. I've done silver. It's horrific. I had a customer who demanded that he wanted to take delivery. I believe it was a newsletter writer out in New York who said that there was that they were all long silver, and that the futures contracts had outweighed the actual amount of silver available. So if people started taking delivery of it, it would force people to recognize this fact and would drive the price even higher. So I had 3 customers come to me and say that they wanted to do this. I said, you're absolutely ridiculous. The process is horrendous. You're in this to trade it, not to own it. And in actuality, they took delivery of it, and it was just for the specific reason. So they didn't actually move it. It stayed in the vault in New York, in the basement, never got touched.
It doesn't show up on your front stop.
I think it cost something like $700 to get somebody to go there, and then like $1,000 to get him to certify it as the same amount, quantity, quality
Yeah.
to then recertify it as a futures contract and get it back to trade out of it. Yeah.
It's
and
you don't wanna
it
get
had
involved in
never
unless you
it had
really
never
want it.
moved.
Yeah, it's
It
just
had never been
involved.
seen, touched, felt, anything like that. And I mean, it costs, I
But
think,
there's
something like
if you
$1,700.
really want to see it, there's a PDF on the website that describes the delivery process. But it's
Per contract.
I think it was
It's-
10. I think it was 10 contracts.
you really got to want to do it.
Yeah.
pretty
I mean,
serious.
it was just stupid.
You really got to.
And
want
the guy
to
was
do it.
happy doing it too. I was like, all right.
So.
A lot of paperwork.
And at silver, hasn't been quite as active in gold, but again, even here, where right now we've had record open interest in our silver contract for over couple of weeks now, ongoing open interest in silver. So, it has a lot to do with the volatility in the markets and stuff like that, but there's good activity in these contracts, like I say, and some spreading even between the mini and the full-size contracts on both sides, and they're really growing, and they're tight and active markets. So what has this all meant for CBOT membership? Until quite recently, CBOT was a straight membership organization. We became a for-profit Delaware company in April. And in June, the membership voted to potentially take this. They approved us going forward with a potential IPO at some point. But we have basically, I got the numbers here, a little over 3,600 members. And these different lines and down here are basically different trading classes of the different members that you'll see. And full membership allows you to trade any of the products on the floor. The AM is the financial room only. Item is the one mainly used for the Dow. Com is the commodities. It's the options one. I'm not even sure what. I think this is also just treasury related. So it's really been a verification of the strategic decisions and the path that we've chosen to take in the past couple of years, not only with our products and new products, but rolling out both the common clearing and the electronic platform. The street seems to think that we are on the right path. I mean, we think we're on the right path, but we're not the only ones that obviously think. The members and the shareholders are also of that opinion. And I noticed this is actually March was the last point on here. Just about 1.5 million for a full membership, and I think the last sale was just over 2 memberships. So John, if you didn't buy the membership yet, you waited too long. A missed trade opportunity.
The IDEM membership lets you trade the mini Dow basically without a commission.
Not without a commission, with a reduced commission. I think the exchange fee for the mini Dow goes down to like 5 cents or something. I mean, that's the real reason that people either buy or lease a membership. Their lease rates also is it brings the.
I'm getting a heads up. We're close to grain close.
Oh yeah, we're at 10. Yeah.